Welcome to another episode of Run Accounting Tutorial. So today we have a question on IAS 1, the preparation of final accounts of company, presentation of financial statements. We have a question on it. So, so before we continue, please subscribe to Run Accounting Tutorials. Subscribe to Run Accounting Tutorials. Okay. So we have the question I read.
KES Limited presented its trial balance as at 31st December 2018 as follows. So we have the trial balance where we have the debit and the credit side. So we have the purchases and sales, we have the inventory, we have the distribution costs, we have the administration costs, we have the receivables and payables, we have the reorganization costs, we have cash at bank, ordinary shares at 50 pesos, 10% irredeemable preference share, you have 10% loans, non-current assets, capital surplus, retained earnings, loan note interest, preference dividend, interim dividend, tax, suspense accounts. And additional information said the building with NBV, that's the net book value of 15,000, is to be revalued to 33,000. A final ordinary dividend of 10% per share is to be proposed. A tax figure in the trial balance represents over provision for the previous year. The current year's tax provision is 9,000. Closing inventory is 36,000. Balance on the suspense account represents proceeds from the issue of 12,000 ordinary shares. Required: prepare the following account for the year ended 31st December 2018 for external users. A. Statement of comprehensive income. B. Statement of changes in equity. Statement of C. And statement of financial position.
So the requirement is saying we should prepare a statement of comprehensive income, statement of changes in equity. So when we have this question, we are going to prepare our statement of comprehensive income. So first of all, let's write the name of the company. That's KES Limited. Statement of comprehensive income for the year ended. So we start with our revenue, as we all know. Start with our revenue. So let's make two signs here, or CD sign, and CD sign also. So we have revenue. Our revenue in the question is 150,000. Then we bring our cost of sales. So when it comes here, we have to come and write opening inventory and all those things. Just write the cost of sales. If you want, you can solve it some way, but then if you want to, you can do the calculation there. So we have an opening inventory of 24,000. Then we add our purchases of 6,000. Then we less our closing stock cost, that's 6,000. So it's our cost of sales. So we add our opening inventory, add our purchases, and less our closing stock to get our cost of sales. So our cost of sales will give us 48,000. So less. So 150 minus 48,000 will give us 102,000, which will be our gross profits. Okay. So that is it. So now we have our gross profits. Then we less our operating expenses. Less our operating. When you check the question, we have operating expenses, we have distribution costs, we have distribution costs, we have administration costs, we have administration costs, we have reorganization costs, it's 7,000. So when we sum up these operating expenses, we will have 77,800. So we less it. When we less it, you have 24150. So that will be our profit before interest and tax. That will be our profits. So that is it. Then we have, when you look at the question, we have a loan interest. We have a loan interest. When you look at the trial balance, we have a loan interest, which means that loan interest was paid. So we have a loan interest of 1,200. 1,200. We are going to, yes. So when we less the loan interest, then we will have 22950. So this 22950, that's profit. That is our profit before tax. And we can move on and less our tax. So when we look at the question, it says that in the additional information, it said the tax figure in the trial balance represents over provision for the previous year, which means that is not the tax for the current year, which is the 2018. So the current year tax provision is 9,000, which means the tax for that particular year is 9,000. So we are going to put a bit less 9,000. So when we less the 9,000, then we have 13950. That is for the profits. So that will be the profits for the year. So this is our profit for the year. Now we can add other incomes. So other comprehensive. Other comprehensive income. Other comprehensive income. When you look at the question, the other comprehensive income that we have here, they said that the building with a net book value of 15,000 to be revalued to 33,000. So it means there has been a depreciation that building value to, it is a gain of from 15,000 to 30,000. It is a gain. So call it revaluation gain. Revaluation. So other comprehensive income. This question we have revaluation gain. The revaluation gain is the difference between the 33,000 pounds that has increased. So we add this to the net profit for the year. this 18,000 and add 18,000 to this. Right. So when we have this, say this is our total comprehensive income. Total. So our total comprehensive income for the year is 31,950. Okay. So now we are done with the statement of comprehensive income. If you have any question, you can put it in the comment section and I'll attend to it. So now let's move to the B. The B is saying we should prepare a statement of changes in input. Statement of changes in input. So let's prepare this new format. In the format, you just put in your fields. So statement of statement changes in equity. List all the equities that we have in the question. So when you look at the question, some of the equities that we have the ordinary share, we have the shares, which is the ordinary shares. So we have the ordinary share. So when you look at this question, there is no share premium. So there will not be a column for share premium. So we have ordinary shares. Then we have capital surplus. Between and your two and bring the two down. So when we look at the question, we have a balances for all these. We have a balances for all. So the balance for the ordinary share. The question, the ordinary share, the balance is 24,000. The balance is 24,000. So we bring 24,000. So we have balances in the question. So we start with the balances that we have in the question. When you look at the question, we have ordinary shares. The amount there is 24,000. So 24,000. And the capital, we have retained earnings of retained earnings is okay. So we have retained earnings as at 1st January 2018, 9,000. 9,000. When we add the 24,000, 27,000 and 9,000. Now, when you read the question, we have a suspense account in the trial balance, which is 6,000. And in additional information, they said the balance on the suspense account represents proceeds from the issue of 12,000 ordinary shares, which means that amount there, 24,000 is for ordinary shares. So we say suspense accounts. Suspense, let's write sub brackets. Share, which is in the trial balance is ordinary. That's what the additional information is saying. So we don't have anything, we don't have any the total for this column will be 6,000 surplus. We have a revaluation surplus too, which is also equity. So the revaluation surplus will go under the what? Capital surplus. So that which will go under the capital. 18,000. And the next thing we have is, so when you look at the question, so let's the profit for the year. Profit of the year. Profit for 1,900. Yes. Then if you read the question said the tax figure in the trial balance represents over provision for the previous year. So over provision means they overstated their tax, which means the difference that they have now is what 1,500. So that would be an income. So if I was supposed to pay 3,000 tax, and I estimated that I'll pay a tax of 4,500. Now that thousand, if I pay the tax 3,000, 1,500 there, it will come back to me as an income. You get it? So the over provision of tax that we are seeing is so over provision of tax. We're going to add that to our equity. We're going to add that to our equity. So over provision, which is 1,500. So add that one to 1,500. Then now we come to our dividends. We have to less our dividends. So we have a preference dividend there. So we have preference dividend. Interim dividend. So preference. So in the question, preference dividend that was paid. So that one we are going to pay that out of our retained. That one will be another retained earnings. Right? So so then we less our interim dividends, which was also 4,000. And when you read the question says there was a final ordinary dividend of 0.1 Ghana cedis per share, which is what to be proposed. So there was a final dividend that was supposed to be paid, and they are saying that it is 0.1 per share. So we have to find the number of ordinary shares. Then we multiply it by what? 10 pesos. So if you want to find the number of shares, then you have to, when you look at the trial balance, you have 20 pesos. When you look at the trial balance, you have 20 pesos, and the cost was what? 24. I gave you the 24,000. Then you are going to say 24,000 divided by what? 0.5, which will give you 48,000. So it was 48,000 shares that was paid, and we had a 24,000. So right now, at that point, we have 48,000 shares there. And when you come to the additional information, they are saying that the balance on the suspense represents proceeds from an issue of 12,000 ordinary shares. So there was an issue of another 12,000 shares again. So now the total shares, ordinary shares, is what? 48,000 plus the 12,000, making it what? 60,000. So the number of ordinary shares that we are going to make the final payment is what? 60,000. So now it is 60,000 ordinary shares we have. They are saying that the balance of the assessment account represents proceeds from issue of 12,000 ordinary shares. So it means there was an issue of 12,000 ordinary shares, and that money is what is in the assessment account. Now we have 48,000 shares, which was paid at 50 cedis, 50 pesos per share, and give us that 24,000. It means 0.5 by 48,000 shares is what it give us the 24,000. There was another issue of 12,000. So now we have 6,000 of shares. So now the final dividend, final dividend is 0.10 times 60,000. So when you multiply this, you have 6,000. Yeah, let's we have 6,000. Okay. So now we can add the ordinary share column. When you add the ordinary share column, you have 24,000 plus 6,000, which will give us 30,000. Then under the capital surplus, you have 45,000. Then under the retained earnings, the 9,000 plus the 13,000, or you have 12,000. For the total, you have 87,000. So that is all for the changes in equity. So that this will be the balance as at 31st December 2018. These are the opening balance. So this is the changes in equity. And if you have any question, put it in the comment section and I'll attend to it. So let's move to, so now let's prepare our statement of financial position. Let's prepare our statement of financial position. Let's continue with the statement of financial position. Statement of financial position. If you want to know the format, two statements. So we have, when it comes to the statement of financial position, we always start with our non. The PPE amounts we have in the trial balance is 5,000. We have the building, which is what, which was 15,000. We have to less the 15,000 from the 105, and now add what's 33 evaluation. We have made it, we just with the 18,000. So then we come to our current asset. That's the only current, no current asset we have. So now let's move to our current assets. Let's move to our current assets. Current assets. So our current assets, we have inventory, which is our producing inventory, which is the additional information. Our producing inventory is 36,000. Producing inventory is 36,000. Then come to our receivables, which is also known as our debtors. Receivables. our receivables is 30,000. Our receivables is 30,000. Then we have cash at bank. Cash at bank, which is also 24,000. So when we add our current assets, you have 90,300. 90,300. So we add our current assets to our non-current assets to have a total asset of 2130. 2130. So that is our total assets. That is our total assets. Now let's move to, so our total assets should be equal to our equity and liabilities. Now let's move to our equity and liabilities. So for equities, our total ordinary share was 30,000. Our total ordinary share is 30,000. So right. So then underline this nicely. Now we have equity. So equity, we have the ordinary shares. We have the ordinary share capital. That amount is 30,000. So when you look at the changes in equity, ordinary share capital, we have 30,000 for the ordinary share. Then we have what? The retained earnings. So we have the retained earnings. We have the retained earnings. So when you go to the changes in equity, the equity that we have there, that's the same thing we are writing here. So you have retained earnings of 12,000. Then we have the capital surplus. We have the capital surplus. Capital surplus. So the capital surplus column, we had a total of 45,000. We had a total of 45,000. So these are the equities that we have. So when we add these three equities, then we are going to have a total of 87,000. Have total of 87,000. Yeah. That is our total equities. Now let's come to our liabilities. So other liabilities, we have non-current liabilities. We have our non-current liabilities. The non-current liabilities, we have the 10% irredeemable preference shares. We treat it as a non-current. The amount is 27,000. Then we have 10% more, which is also a non-current liability, which is 24,000. When we add these two non-current liabilities, 51,000. Now let's move to the current liabilities. Let's move to the current liabilities. Let's move to the current liabilities. Current liabilities, we have the payables. That also be the creditors. We have the payables. Payables amount is 60,000 in the question. 60,000. Then you have the tax payable. That's the tax that we are supposed to pay. So we see this one in this lecture. So if it is in the additional information, it means it has not been paid. So if it is tax payable, we are going to use the current year's tax payable. So if it were to be in a trial balance, it has not been paid. So we are going to use the current year's own. So the current year was 9,000. Was 9,000. It's not 90,000. It's 9,000. It's 9,000. Then we have the final dividend that we are supposed to pay. That one uh, was in the additional information, which means it has not been paid. So the final, so this is a liability. The final dividend. Yeah, which is also 6,000. So when you add the 60,000, 9,000 and 6,000, 75,000. So when we add our equity of 87,300 and non-current liabilities of 51,000 and our current liabilities of 75,000, it's 2,213. So therefore we have our statement of financial position being balanced. So that is all for this question on IS1. We have this one is 2,133, and we have our assets 2,22133. Our work has balanced. So that is all for this. Please subscribe to Run Accounting Tutorials. I have more videos for you. Subscribe so you can have access to all my videos and tutorials. See you in my next video. Bye bye.